Do you owe more on your house than it's worth? A quarter of the folks in this country with mortgages sure do. Should you just walk away? That is the question in today's No Way to Live segment. Walking away from your mortgage can make financial sense for sure, especially if you need to move to a new job. However, there may be legal problems depending on the state you're in, and certainly a hit to your credit score. We're here with Richmond Burton, who walked away from his mortgage. We're also joined by Ryan Grimm of the Huffington Post, who interviewed 50 folks faced with this decision and published a great piece on the Huffington Post today as part of our No Way to Live collaboration. You should check that out if you haven't already on the Huffington Post. Ryan, welcome. Congrats on a nice piece. Richmond,
thanks, Dylan.
Give us a sense of your emotional experience in making the decision to walk away from this type of an obligation.
Huge relief, huge, because it was a tremendous amount of pressure I was under for a long period of time. And the big turnaround was when I called the bank and said, you can have my house if you release me from my mortgage. And they said no. So I said, well, then I'm going to stop paying my mortgage. And at that point, I felt relieved.
I'm going to come back to you, but Ryan, isn't the entire point of a home mortgage that I post my house as collateral against the fact that I'm going to pay my mortgage? Additionally, I pay a higher interest rate for the right to be able to post that collateral if I decide I want to walk away, as opposed to a student loan that gets a lower interest rate, but because it's a lower interest rate, I can't walk away from my student debt. There's no collateral. How is it that I can't walk away and just give them the house?
Sure. And a lot of people that we spoke to talked about that, because at first they think that they're doing something morally wrong because they feel like they have this obligation to pay back this loan. Mm-hmm. But the way that you laid it out is the right way to look at it. They entered into a contract with the bank. They said, if we can't pay back this loan, then you will get this house. And so when people finally came to the realization that they were going to walk away, a lot of them called the bank and they said, come get your house. That's the deal we made. That's the deal I'm giving you now. Come get it. I'm out of here. The concern, obviously, the hit to your credit score, concern about your ability to find new housing. In other words, can you tell us the consequences in terms of your relationship with the modern financial system?
Yeah, well, what the procedure actually is was never spelled out to me, and I couldn't figure out how to get that information. For example, if I just abandoned the house, theoretically, I wasn't going to do that, then what happens? The bank seemed to be well positioned to sue me, and they held out on that until the very, very end. And so it's important for people to know also to not, it's called a deficiency waiver. When you finally do sign off with the bank, make sure that they don't retain the right to sue you for their losses, quote unquote, which can be no telling how much.
But let's expand on that a little bit. Walking away from your mortgage, walking away from your house is not as simple then as taking the house keys, putting them on the counter, getting in the car, and driving to Mexico.
That's correct.
What did you actually have to do?
Well, I tried to communicate with them and they wouldn't talk to me. What happened after that was a buyer came in who offered a short sale offer to the bank, and it still took an additional year for them to accept it. And that was with an independent lawyer negotiating the short sale. So I remained in the house during that time and maintained it, but I continued to not pay my mortgage.
We're looking at the walkaway options here on the graphic. Just mail in the keys, the short sale, or some sort of negotiation with the bank. Ryan, how common is what Richmond is describing, and what are the best ways to go about doing it?
Most people we talked to did something similar to that the only way that they could get their bank's attention was to stop paying the mortgage. And as soon as they stopped paying it, then they started getting calls from the bank rather than them trying to get in touch with the bank and not getting a call back. What's unusual in Richmond's situation is that the bank actually finally did, more than a year later, accept a short sale. You know, we first spoke with Richmond back in January of 2010, and it didn't happen until December. He had stopped paying his mortgage even before we spoke spoke to him. So it took more than a year for the bank to accept this short sale. That's rare. Most of the people we talked to that were simply foreclosed on. But it took months, not 2 months, 3 months, 4 months, but often it took a year and a half for the bank to finally get around to it. A number of people that we spoke to said, actually, I still technically own the home. They're living, like one guy I talked to was living in a trailer park now and keeps getting bills for the house that he walked away from almost a year ago. And he said he just chuckles at these bills. He says the bank doesn't realize I'm done with them. This is their house now. I don't care what happens to it. I'm finished.
And if you could just frame quickly, Ryan, one more time, the legal interaction, the legal contract, because corporations do this all the time, where they have a building as collateral on a loan. They won't pay the loan. They'll post the building. That's what collateral is. I give you my car. You give me a loan for $10,000 because I need it. I give you my car. I don't pay back the loan. You keep the car. Collateral is a fairly well understood concept. How is it that these underwater mortgages, especially having watched the banks relieved of all of their obligations by the Federal Reserve, by the TARP, by the accounting relief, the banks are obliged to nothing in their own liabilities and are paying record bonuses again this year, and yet they seem to want to make the homeowner be beholden to contracts that have been basically rendered null and void by the financial crisis for the banks.
Right. The free market is defined by its amorality, that people are supposed to act within the law, but within their own self-interest. And that's the tension that's at the root of what's going on here. Because what's in the self-interest of most people who are underwater is to walk away from their home. But that's not in the interest of the overall banking system. And so that's where the morality comes into play. And whenever bankers start talking about morality, you know the system is flipped upside down.
Specifically because the bankers have accepted and continue to accept trillions of dollars in subsidies while paying themselves billions of dollars in bonuses and not lending to Americans.
Right. And one of the things that Richmond suggested to us is that he's not alone here, that there are so many people out there going through this that what there ought to be are support groups for people who are underwater and are going through the situations with the banks. So we collaborated with Meetup to set up meetup.com/Huffington Post, where we're trying to allow people to organize gatherings in their local community with other people who are going through a similar situation, because that's where you're going to find real answers, is from people who have gone through this themselves.
I could not agree more, and could not advocate people check out that meetup groups currently being arranged on the Huffington Post. And I can't thank you, Richmond, more for coming out and sharing your story so that people can see that they are not alone. For more on whether you should walk away from your mortgage, go to the Huffington Post and DylanRatigan.com as we continue our week-long No Way to Live series with resources, stories, and information to help you understand what you're really dealing with. And tomorrow, a final look at financial fraud. Accounting fraud at the banking level, theft across the board, and yet not a single prosecution of consequence. It is stunning to behold until you see how much of the bank money flows into American political culture, 40% of it for both parties.